Okay, folks, welcome back. Good morning to everyone. We're going to be looking at the position that should have kicked off for your case study for the British pound. And we have 8:30 a.m. news, so we're going to observe the reaction at the PPI release at 8:30 a.m. And let's go over to our charts. Okay, so I have the CME opening delineated on the chart. We've been lower on the dollar index. Now we're trading into an hourly order block over here. So we have a potential order block in here that price could react on in the news. If we spike down through that, the next area of order flow is right in here. I'm not too excited about that one. So if we lose this order block, we're probably going to aim for the sell stops below here, as noted yesterday on the chart index. So that's the either we're finding support here or we're going for the sell stops below there. Now, what that means is we have to watch this order block closely in the next 25 minutes or so. If it gives way before the news release, I got to kill this short on cable, and we'll take a look at that real quick. So I have the, let me scrub this over here a little bit. There you go. So I'm going to take this off. Now we don't need that. So the 127.23 price and its gap that we outlined has been filled. Now we're hanging up above it. That's concerning me a little bit. Admittedly, I don't like the idea that it's doing this. I was hoping it would give back a little bit of ground and come back down below at least the middle of the gap. So it's showing reluctancy to do it. So will we get down for the sell stops below here today? I don't know. We'll have to see it the news release in about less than a half an hour. This gap is the next upside, and then we have these equal highs. Notice my stop is below that. So we have a stop that would hopefully permit me an opportunity if we lose the order block on the dollar index over here. And let's look at it like this. If we watch it trade down through, now I'm going to let it have the close. If it trades down through the close, I have to eliminate the short on cable because they'll probably want to gun it, aim for the buy stops above these equal highs. I have no problem filling this gap if it wants to go higher. If that bullish order block on the dollar gives way, this gap won't stop it. They'll run for the liquidity above these equal highs. So nice to see it react all the way up into this level, but it's gotten a little ahead of itself. I'm hoping it's just because of short squeeze, but we'll see. Because the news is pending on the dollar and we may get reaction, I don't want to take any kind of a stop and move it lower yet because it could spike up a little bit above this high here. How much so? I don't want to see it go obviously above the order block here. So let's have that outlined on our chart. I'll just borrow this line here. Don't want to see it go above 27.40. We'll give it 27.45. Is that about right? Yeah, 27.45. If it trades at 27.45, I'll save the stop. It won't be a full stop, and I'll just move to the sidelines and wait for new information. And that's that. Real quick, while we're looking at the outcome of our setup that was given for the London, that did not fill until 5:22. Oh, is that right? It would have been 6:22, right? Yeah, 6:22, my time. Yeah, 6:22 filled there. So that was a little outside the kill zone, which is not going to happen sometimes if you're going to use a limit order. But we'll see what we get in terms of the dollar reaction. Let's look at the CAD. This pair fell completely through the order block, so we have a 90% fulfillment of the market maker sell profile. We have consolidation, rally, return to consolidation, smart money reversal, low risk short, distribution, redistribution, and we came all the way down, didn't quite get down below that yet, but we have the order block here and a small portion of fair value gap right in here. So we're looking for sell stops below this low here on dollar CAD. This no longer is a viable setup. So too heavy for this pair to get back up there, but nice to see over 100 pips drop down from what we were talking about. Just didn't get any bounce off of that order block at all. Euro, still inside its range. It's trapped between two reference points, mean threshold, bearish order block, and bullish order block. So it's got to move its way out of here to give me indication what it wants to do. I don't want to trade it inside of this. Which is the reason why I said no setup. And the 15-minute time frame, we saw a little bit of a pop here. We have buy stops above it, but it doesn't make sense. Personally, this is my personal opinion. It doesn't make sense to come back up here because we've had all of this action in here, running. So to me, and I may be completely wrong here, and I'm okay with that, this just looks like I'm going to go higher, but I'm really not going to, and just go lower. That's personally what I see. In other words, I see this as a failure swing. But I don't have a lot of conviction to the degree where I would look to short it. So bear that in mind. So I know a lot of you like to take that and run with it and say, well, ICT says sell a secret code. No, I'm telling you, I don't know. I don't know for sure if it wants to do that, but I just don't trust it rallying from here. Okay, so I don't think they'll want to take those buy stops, but if they do, it'll probably be just like one of those little 2 or 5 pip moves above it and then run away. That's what I personally think. Or it could just stay in the range. I just don't want to be a buyer of it. I just lost interest where we're at right now. Obviously, it could change if we rally through. Then I'm going to be more interested in seeing it rally through to the buy stops up here, but I just don't see it doing it yet. So there you go. I know it's not much of information, but that's my honest opinion about what I see it. And Euro Pound's not really giving us much. We have a little bit of a bullish order flow in here, but the sell stops below that look like they're hot, so they may want to jab down there and hit them, and they may recapitalize the order block here. That comes in at 87.80. So 87.80 should be the support. Look for a return for offset accumulation where it'll take the sell stops out and then look to take it higher up into that fair value gap, which is over good grief. There it is. Way over here in November. So that's what's remaining. So that's that. And let's go back to our dollar index. A couple more minutes, CME opening. Now this could have been a return back to fair value, bearish order block, and then expand down to this old wick low on the November 8th for dollar. I'll let you see that again over here. So it could be doing that to expand down. Or it could trap traders thinking that and come up here and close this. And then this maybe, and this is why I don't have a lot of conviction yet. I'm dragging my feet a little bit this week. So we have fair value gap right to the bottom of that breaker. See that? 62% retracement level. That's why I'm nervous about wanting to be aggressive about going short here on the dollar, because it made a low, it made a lower low. This could be just a higher low. Market structure, intermediate term to long-term low, trade up to 60% retracement level, clear up all this inefficiency, and then make the run later on for this, and maybe even go back down into here. So that's what's on my mind. So we'll have to watch a couple more minutes and see any opening, see if we get any kind of favorable movement. Again, I don't like this winding up consolidation stuff, which looks like it may need to at least try to take out the daily high. And I'll have to be very careful about where we go in regards to that, because if it loses 27.45, I'm out. I just want to get my screen ready in case I have to bail. If I have to collapse the trade, which looks highly probable here, there will be no more setups for this morning. I have to pull my self away from the charts because I don't see anything that would put me in I want to take this type of trade to recoup. So I'll have to go home today with a small loss, which is okay. It's still early in the week, but I don't see anything going back in to like mitigate it right away. The action's a little too one-sided for this. And I might say, well, okay, well, if it's going up there and you think it's going to go above those buy stops there, why not buy it? Well, you can. Personally, I just don't want to do that, because we would be buying it at a really, really deep premium relative to the range here and here, and we're bracketed in. We have sell stop liquidity pool and buy stop liquidity pool, and they could just really squeeze it up tight and maybe make me take the short out at 27.45 and never even run to where my stop is, and that's okay. I just don't want to take a full stop. That's a catastrophic stop up here, so I don't want to take that. Ideally, it should have fell from here, and I'm already holding it more than I'm comfortable, but I'm permitting it because there's been a lot of hoopla from the UK about what's going on, and, you know, well, you know what it's like if you read the headlines. It's all kinds of craziness over there. That's what happens when you get a Trump in office. I had to throw that in there, sorry. The reason why I would be willing to collapse the trade ahead of the news is because if we have an injection of volatility, it'd be easy for it to spike and spread right on up to 27.65 and gap to 27.75. And it would give me an opportunity to reduce the exposure and risk. Again, it's not about being right. I don't care about being right. I don't care about accuracy. I don't care about, well, it's bottom line is I don't care about being right. I'm caring about preserving capital. So if I know the probability, if it goes to 27.45, look at where that is in relationship to the gap. We're already above it. I'm only allowing it a certain measure of imperfection. In my opinion, I'm being very liberal with it. So to collapse it before the news, to me, makes better sense because it can still spread and reach up there for the liquidity. Think about it. They're grinding it up higher, 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 except for the fair value gap that we've outlined in here, and the next one's up here. So if it goes up here to close that in, the spread alone could tag me out. So what's more important? Being right and holding to an idea that really has fallen off of probabilities, because in an ideal situation, this had done what? Should have came up, filled the gap, maybe a little bit above it, maybe back into the bearish order block here, but then go lower. But it hasn't done so. So they're aiming and driving it for something. The closer they get to this gap up here, the more likely they're going to use the news in a couple minutes to snatch these buy stops. And then it could fall to hell. And, who knows? I don't know. But it won't make sense for me to be in the marketplace above 27.45 because we're already way above where it should have stopped. So this is what I was hoping to see. All I wanted to see is it poke above and get rid of this consolidation idea. Poke above the high here, and then maybe trade lower. That would be good. It would make sense for that. But any higher than we're doing now, no good. Yeah, I've already mentioned Canadian dollar, Nino. You gotta stay awake, Nino. I might actually give you something that makes money. Tomorrow is going to be crazy. It's going to be literally insane. The price action is going to be. It's not worth trading. There won't be any, in my opinion, there won't be any setups that I'm probably going to be sharing at all because it's FOMC. I mean, there's all kinds of stuff coming out tomorrow. So if you're trading tomorrow, you really have no self-control whatsoever, and you're gambling because there's no one's going to know accurately what FOMC is going to do with price. It's like non-farm payroll on steroids. Why has there been a lack of low resistance liquidity runs? And is there a reason for it? Anton, it's the byproduct of it's a very scared market, and every pair is doing its own thing. So when it's like this, you got to be very, very careful, number one, and you got to have a very strong conviction about what it wants to do for the pair you're trading. There's not a whole lot of clarity. No one really knows what's going on. And as soon as you think it's getting better, it goes into a tailspin and goes cruddy again. And now you got the summer doldrums building into it now. So just beware that it's not a permanent thing. Fall's coming. And if you basically blow all your capital now, or if you lose your nerve now, you won't be ready for September, October, and November. That's where your money's going to be made this year. Unfortunately, yes. Patience is required. It's hard to have patience when you're paying for it too. So you're paying and waiting, and you're having to wait. And it's a very, very hard lesson. But you'll be better traders because of it. Yes, I'll be talking about options on futures. Let's take a quick look over here at the dollar. Still holding inside the order block. Got about, what is that, 7 minutes or so? We'll have our news out. Um, the New York Open, I'm going to be adding a lot of information about that with this week's bond content. You learn my bond setups when I was trading treasury bonds back in the 90s, which will help for you understanding why the markets are so screwed up right now. And you'll know what it looks like when the markets are getting ready to blast off and be one-sided directional plays, which draws in low resistance liquidity runs. Some of you have forgotten the bond market, their interest rates. So if the interest rate markets are in a rut, in a trading range, that's going to put the brakes on any sustained trends. And that's why we're having these range-bound environments. Markets are still going to move around, but you just got to be careful not to expect some extrapolated trend that goes on for months and months and months one direction. The application of intermarket analysis with the bond market, that's all part of the trading plan breakdown for all the asset classes in August. What to do, what to look for, when to apply it, when not to concern yourself with it. Do I agree that volatility has been very limited in the last few years, and does it worry you? To me, it just means a lot of the big players are hoarding cash, and they're just sitting on the sidelines. A lot of the folks laughed when years ago I was telling everyone what was coming, the types of things that we're going to see around the world, especially in the U.S. I told you it was going to be like the Wild West in the United States. And it's like a circus. I mean, every day some kind of lunacy's breaking off. And now it's in every country. I mean, Brazil's going crazy right now. The Philippines, martial law has been broken out. We have the UK, which I was actually thinking about moving to the UK. I was trying to talk my wife into it, for the last 3.5 years. And she's like, see, if we would have moved over there, I'd be scared to death, blah, blah, blah. So, I mean, it's over there now, too. So the whole world is in a mess. And it really is. That's concerning. Because there's really no place you can really look to and say, well, it's going to be nice here. You're going to be preserved from having experienced any of that stuff. But the bottom line is there's an agenda here. And everyone used to say, and probably still do, tinfoil hat ICT discussions. But if you look around, it's not. It's the obvious, and we were just ahead of the curve. I like Singapore. It's great trading hours. But again, my wife is against it, so. I've tried to talk her into doing Perth too, but again, I don't know. I think it's her mother. If something happens and she goes into, right now her cancer's in remission, but they found another spot on one of her lungs, and they got to go and do another biopsy, and she doesn't want to get it done. She told my wife if they think it's cancer or they find out it's cancer, she's not getting that operation anymore. She's just going to just let it do whatever it's going to do to her, and she wants to go, which my wife's not taking that well, but you got to respect someone's wishes. It's what she went through wasn't pleasant at all. All right, so we got 2 minutes, less than 2 minutes. Yes, I expect the stock market to crash this fall. If it does not crash this fall, it's not crashing. They're just going to keep sending it higher and higher and higher, and the Fed will just keep putting more money into it, and it'll eventually happen later on. But if it doesn't happen this fall, we're going to be going higher for the next 3 years. And this is my personal strongest opinion. If we don't see a stock market crash this fall, I am 100% convinced that the Fed is in the stock market and they're artificially propping up, and that just makes it worse when it finally does come. And then I do think we will see a replacement of the dollar with the stock market crash, and it will be end of days type stuff. How can I say what, Paul? I've been jawboning for the last couple months. Why I think if it doesn't go down this fall, it's going to go up for 3 years. They won't let it drop. But personally, I think they got the beautiful scapegoat by Donald Trump being in office. They're going to say he caused it when it's been in the process of being laid out. It doesn't matter who was going to be in the office. Hillary would have been in office. We would have gotten the war with Russia, and that would have been the catalyst. Okay, here we go. We got the news. If we make a higher high, I'm bailing. As long as it doesn't make a new higher high here, I'm holding the short. So that way I can talk to you, because now I'm on a rant. But if we have the if we would have had Hillary Clinton in there, we would have had a Russian war. And you can see how they're trying to pop one off when Donald Trump got in office, trying to say, oh, he's a Russian spy, or he's in cahoots with Russia. So there's an agenda here that they wanted to start up, because there's no better way of crashing the stock market than a war with the Ruskies. So since that didn't happen, okay, they're going to have to come up with some other storyline, but Donald Trump's right smack dab in the middle of it. And again, I'm not trying to say Donald Trump's the greatest president in the world. I don't think that at all. But I like what he's come in and tried to do on a few things, but I think he's compromised. And I've said this about every president that gets in office. You may go in there with the best of intentions and best heart, and maybe Obama was like that. Maybe he went in there with the greatest of intentions, and he was going to be the greatest thing in the world in terms of world leaders. But something happened as soon as he got in office. He changed gears immediately. And I think what happens is when you get in there, they say, hey, look, you hear about that guy JFK? You ever hear what happened to him? And all of a sudden, they roll over, and whatever they're told to do is what happens. And Americans and people around the world get mad and say, oh, well, it's this and it's that. I honestly believe in my heart of hearts that whoever gets in office, they're not leading anything. They're just a person that's following the script. They're in a play. They're in a movie script. They have to play their part. If they don't, the end credits come a lot sooner for them than they want. And that's kind of scary. But I was reading an article with a guy. He was like, look, I'm going to start running for office. And he's really not anybody that you probably would know. I certainly don't know who he was. But he was like, I want to go in there, and my campaign's going to be ending the Fed. Well, I can tell you this much. Even if that guy got any ground, something would happen. The plane ride, I wouldn't be on a plane with him, and I wouldn't be riding on a bus with him. But we are in some strange, strange times. And all of that, all of that stuff has its reverberations in the marketplace. And I personally think the people that have a ton of money, a ton more money than any of us collectively would have, those individuals, they're not in the markets right now. They're not in the markets at all. They don't have any measure of risk on at all. And what are they doing with their money? I don't know. And I've been trying to figure that out for the last 5 years because I know it's coming. And apart from being short equities and long gold and silver, I think initially they'll have nice pops. But if it gets too wild, I don't even think they're going to be good markets. I think they're going to crash those as well. Yeah, I don't know, Joe. Like I said, I don't have a strong opinion about what Obama was or wasn't before he went in office. I just know he sucked in office. Everything that upset the Constitution, our civil rights, our heritage as a nation, everything, all that stuff has been marred by his presidency. But I'm going off in a conversation that's probably not a good one for this type of group. All right, let's take a peek over here at the dollar index. So far, a little bit of support found in the order block. Okay. Euro still holding near the high of the day. Yeah, if we lose half of the fair value gap, in other words, if we get down, what's the close on this? If it gets down to 27.20, I'll drop the stop down to today's intraday high. It should not rally back up to that point if it gets down to there. And I'll drop the stop a little bit from where we are now to 30. 30 pips. So, anyway. If you're looking at the lost my train of thought here. Yeah, if we would have had Hillary Clinton in office, the storyline would have been, we're going to war with Russia. Because you think about what they were actually contemplating. They were trying to scrub the entire election. Like the votes didn't take place, we can't trust this. We have to take him out of office and we have to have another election. I mean, that's insanity. Can you imagine if we would have did another election? I think that would have been the catalyst to send the stock market down. I mean, that's all we're really needing. We need a reason to justify, because it can't just happen on its own. Because there has to be a way for them to say, okay, it's good now to invest again because this problem person we had in the White House is no longer in office. Now we can go back to regular things. And then we can trust the system. We can trust there is no manipulation in the marketplace. It's a free marketplace, folks. Come on, put your money in here. Go back to normal business. Put all your funds back into IRAs. It's normal. Don't worry about it. That monster in the closet has been caged now and everything is normal. Because they cannot let the obvious, which you've all learned working with me, is there's clear manipulation, absolute manipulation, because it's like the lottery. Everyone believes that if they spend $2 for a Powerball ticket, they have the probabilities of winning $470 million. That's a stupid tax. People that believe that are stupid. So yes, once in a while they're going to have somebody that says they win it or they create the illusion. I don't believe they have all these people that win, but nonetheless, I'm sure there's somebody in here that probably says they know somebody, and it's great. But the point is they give us this illusion all the time that we have freedom, that we have a choice, we have a system that's in our best interest if we invest in it. But we're so far gone, okay, in terms of the U.S. that we don't have enough money to support, the money that's on deposit. In 2008, nobody realizes how close we came to crashing all the global economies because they're tied to the dollar. So when you understand the balancing act that everything has, there has to be a reset. It has to come because it can't sustain itself. And the people that argue against that don't know what they're talking about and don't spend any time looking at it. And they're the same ones that if you sit down with them and point these things out and say, look, now take a look at this and take a look at this, take a look at this. The sum total won't come to the conclusion where they say, okay, yeah, this is a problem. They'll just say, well, you're just a doom and gloomer. I'm not a doom and gloomer. I hope it crashes because it's a wonderful opportunity because we need an enema. This whole thing's a mess. Real estate's getting ready to crash. The debt market isn't done. It's going a lot lower. But when that snaps, it's going to be really bad. And you gotta take that in consideration because the job market hasn't improved as much as they want to say it is. All those non-farm payroll data, they're all fake. They're all phony. And they don't even count the number of people that are, they just aren't being factored in the numbers anymore. But they don't have jobs. My wife has family members that can't get a job. They've lost their jobs in the last couple of years, and they can't get any jobs unless they want to work at like a fast food place. And who wants to do that? Nobody wants to do that. I mean, even teenagers don't even want to do it. So, we have a lot of problems, not just in the U.S., around the world. So it's not one of those environments where you throw a dart at the stock table and you buy it, you're going to do well. And that's what it was like in the 90s. That's why I got lucky in the beginning. You got to know what you're doing now. And if you don't, you can get really beat up or destroyed quickly. The numbers, all the employment numbers, okay? When you had employment and you lost your job with Obama, it usually, and if I'm not mistaken, I think it's 6 months that you could draw unemployment benefits. Well, he ended up giving it for an additional 6 months so people could draw more funds. Well, a lot of the folks said, well, that's 6 months of vacation time. I'm not really interested in getting another job. I'll get another job later on. And the problem is the economy receded even more. So when they thought they could just go right back into the job market after taking a full year off, everybody knows I came from a food industry. So I did a vending route. I also managed a Domino's pizza. So I know as a manager, I don't want somebody that's been sitting on their end for a year. That shows no ambition. And to me, I would have more respect for someone if they came to me for a job. If they were working a menial job anywhere, just say, look, I had to eat. I had to take this job. I don't want to do it. I'm working there now, but this is what I want to do, in your field or your business. And managers will hire someone that has a job, and it's bad. But when you really break it down, it's true. It's easier to get a job when you have one versus when you don't have one. So when we have all these folks sitting on their rear end, okay, and I'm not saying this wasn't everybody, but I know folks that did this. And I told them, I said, you're going to wait around. You're not going to be able to get one, and it's going to be hard. And they tell me now, I wish I would have listened to you. And I tell them all the time, I wish I would have convinced you better. But I used to deliver pizza and I managed the Domino's, yeah. So when these folks sat around and didn't work anymore and they tried to get jobs, obviously when we do the non-farm payroll numbers, they're factored in on the numbers right now. But after you fall out of the system and you no longer can collect the benefits, you're not even factored in a number anymore. It's it. You're gone. So there's a large number of people that are still out there that aren't even in these numbers that don't have jobs. if you look at the economic climate in the U.S., there's a lot of companies, a lot of brick and mortar companies are closing. So if you look at that, it doesn't bode well for economy, and not everything's Amazon. I mean, you can probably buy just about anything that comes to mind off of Amazon, but there's still a lot of older folks that don't trust that. They want to go to a store and pick up what they're buying and handle it and look at the box and do all that stuff. They don't trust, e-commerce. And because of all the identity theft and things, there's a large degree of old timers that just don't want to do it. So the long and short of it is, we have to shake out all this fluff, and there's a lot of it in the marketplace. And the best way is just to make it bad. It's got to be sudden. It's got to be quick. Let it be painful. Let it be ugly. People are going to get hurt. Banks are going to have to close. Smaller banks are going to have to, either absorb them like we saw in 2008, 2009. And I think personally that was part of the plan. The larger banks gobbled up all the smaller banks and took out that realm of competition. So we bailed them out, but there's a bail-in coming, and they're going to go after the 401ks. They're going to say that they have to do this to keep things going because the Fed won't bail us out this time. China's in debt now, and they bought a lot of our debt. So now China's in debt. Who's bailing them out? No one's paying attention to that. China's got all kinds of problems right now. No, you don't hear anybody talking about it, but you got to pay a lot more attention to just whatever. So, anyway, I'm going on and on like I'm on YouTube, but it's been a while since I said anything about these types of things, and I'm passionate about it, even though my wife doesn't like to hear these things. It scares her, and I tell her constantly, there's nothing to be scared of because you can't control it. You can't stop it from happening when it happens. But isn't it far better than anticipate the likelihood of it happening so that way you're not completely like a deer in headlights? You anticipated something bad happening, and it is what it is. But, here's the thing. Before we had the stock market, before we had, sports cars and luxury houses and exotic cruises and fancy watches and clothes and iPhones that we can do more with our iPhone than presidents could do, when Clinton was in office. We got more control and information in our hands in our smartphone than President Clinton had during his presidency. That's insane. That's insanity. That's what we have in our hands. But we have grown so accustomed, and think about this, if you leave the house and you forget your cell phone, what do you feel like when you don't have it in your hand or in reach? Like you're naked. There's something wrong. You don't know what's going on. It's crazy because you have been assimilated. You're part of the system now. You're plugged in. But look what's going on before we had all these things. We did fine without it all. We didn't have to have all these types of things. We had ingenuity. We had commerce. We had business. We had economy booming. Everybody lived just fine without all this stuff. But it creates that fear factor. Okay, where everyone goes crazy if we lose this way of living. This way of living can be reestablished at a later time, but we need to have some kind of reset. It needs to get rid of all this stuff. And there's always going to be new bubbles, new problems. Things are going to get too far out of hand in the future. But we've had really no real considerable realistic retracement in the equities market. And where they're at right now, it's not justified. It's absolutely not justified. All of that was central bank buying. I said this for years. When it started happening, I said, the central banks are in there. They're the ones that's buying the stocks up. And now, granted, because it's gone up, people have put more money into it. But they're buying the highs. If we have a 15% retracement, that's killing people. They're not going to stay. They're not going to stay in that. They're going to get wiped out. So, like I said, if it doesn't happen this fall, I'm a stock bull for years, but I don't think it's coming. I think it's going to be a crash. I think it's definitely. They have so many storylines built into Donald Trump. It's even people that don't think like this are now starting to say, you know what, this is so obvious. They're painting this tapestry where it's going to be so easy for everyone to say, yep, we should have never put Donald Trump in office. Man, he screwed everything up. When the storyline was in place in 2008. See, everybody that has a lot of exposure that are elite and rich people, I mean, crazy rich people, they have been exiting this entire time. They don't have any exposure like they had back in 2007, 2008. They're not in the market right now. That's not what's going on. This whole central bank business, that's been allowing the elite to get out. You're not going to want to believe it. You're not going to want to hear about it, but it's going to make sense 5 years from now when we look back at all the carnage. And there's nothing you can do about it because it's already happened. But that's what I see. My horizon sees that. It's a wasteland of upside. It's all going down. And I'm welcoming it. I want it to happen because it needs to. And then once the dust settles, we'll have a closer, in my opinion, a more appropriate perspective on valuation then. And then it's going to take companies to do very well to to gain market share and do what we see some stocks doing that are unjustified. Stocks going up $100 a share in a month, or 6 weeks, $150 a share in 6 weeks. For what? What's going on there? I don't know. The point is we've lost normalcy and we need to return to it or get close as we can to it. Because right now, I think anybody that buys these equities at these highs right now where we're at just is ludicrous. And once this starts, like I said, once this thing snaps, it's not going to provide us a whole lot of opportunities. It's not going to be a sell-off, a rally, sell that rally, sell off, rally, sell that. No, it's not going to be like that at all. It's not going to be that at all. If you do your research on the stock market crashes, you see how they set these things up. Bank of America. Bank of America was like, that was the stock. That was the thing. That was the, if you were going to be in the banking sector with your investments, you owned Bank of America. And the leader of that company, right before the stock market crash, said, that stock right there is going to go up $100 before it goes down 10. And everybody heard that. We're like, man, we definitely need to be in this one. And a lot of people don't know, but Bank of America was the leader issue. That stock led the crash. They marked it down $100. It was crazy. I mean, you don't realize how much bullcrap there is in this game until you really, really research it. It's crazy. But, it is. I know, Nina, I said 5,000 points ago it was going to crash, but you don't see me trading it either. So, can you imagine what they're going to mark down these stocks when they do send it lower? When this thing really does crash, say it doesn't crash this fall. Say I'm wrong, and I'm completely oblivious about stocks, and I'm wrong. Okay, fine. 7 years from now, when it eventually does happen, it's not going to be a small little downtrend bear market. It's not going to be like that. It's going to be so abrupt, and well, it's going to be scary as hell in my opinion. Because it's going to be relentless. It's going to be a sudden surge lower. It's going to be violent, and the normal breaks that they put in on trading aren't going to help. It's just going to exacerbate the whole thing. And to me, that would be nothing better to be in some kind of a short position in that environment, because there's no better feeling than being stuck in a lock limit down in your bearish. That's fun. And it's as fun as it is. It's terrifying because there's somebody that's long. And no, it's not going to be a one-day fall. It's going to be a long, at least six to 9 months of a decline. Because once it breaks, no one's going to be wanting to buy it. I mean, you're going to have everybody on CNBC saying Jim Cramer's going to be out there with pom-poms. It's time to buy. And that's going to be the end of his career. It's going to be over for him. Yeah, I made a lot of money in 2008. 2007, 2008 were 2006, 2007, 2008, and 2009 were awesome, awesome, awesome years. I mean, they were great. I mean, oh man, it was incredible. But unfortunately, that has spoiled me. Even for somebody that's been doing it as long as I have, I felt that we moved into an information age where that was going to be the normal for markets now, and that's why I was like, man, this is great. If the if the currency markets move around like this, that's a normal. Oh man, this is going to be. I'm going to hit every one of my life goals. In 10 years, it's going to be over. I'm done. But obviously, we went into a rut, and now that's why I study all these things, because I had to make sense of why the market was doing what it was doing. And the more research I did, and more studies that I did, I came to the conclusion that we are in a bigger mess than I thought we were back in 2007. It's crazy because in the 2000s, 2001, 2004, everybody I knew was going out buying houses, and they were buying like $400,000, $500,000 houses, and they're like, oh man, my payment's less than, $600 a month. That's better than rent. I'm like, what? Are you crazy? Yeah, this is good. This is good. Yeah, I got a payment. It's like $750, and then you add on, the PMIs and add all the, the normal stuff. It's about $1,000. So I mean, I got a $500,000 house for like $1,000 a month. I'm like, dude, do you realize what's going to happen in 10 years? Like, you're paying just the interest, and the principal's going to be staring you in the face. And your payment's going to balloon up like crazy over like several thousands of dollars, much more than you think, a month. Oh no! It's cool. It's cool. I'll get at it. It's going to appreciate by then too. Well, neither one of those things happened, and about 7 of those individuals that I knew live in studio apartments now. So they had monstrosities of a house back then, but they live in a studio apartment now. So everything's backwards. It's crazy. Like when you look at things and you think, this is the way I should do, in life. I should do this. I should buy this. I should live like this. And then when you get into it, you think it's the right thing, and then it's like everything else. You look back and if you could go back and rewind it and undo it, that's what I hear them say all the time. I wish I would have listened to you. Well, I wish I would have been wrong. There's one of the times where I wish I would have been wrong. But I kept telling him, I said, this is bad. I told my uncle, he's a finance major, and I told him, I said, when I was a 16-year-old, I told him, I said, why are we having all these discussions about the economy? Why don't you just print more money? Now, this is a 16-year-old mindset. I don't know anything. So he's like, you can't, because that's going to, screw up the buying power of the dollar. You print too much money, then it screws it up. So I didn't make any sense to me, because in my mind, you print a dollar bill and you can spend it. Now, you're going to tell somebody, no, if you have a car for sale, you want to sell it for $25,000 and they come to you with $24,000, you're going to tell them, no, I don't want your money. Who cares how much money was printed? That's $24,000 you can take and put in your hands, spend, put groceries in your pantry, pay your mortgage payment or whatever. You can spend it. That was my mindset as a 16-year-old. But as I learned, my uncle was right. But then later on, my uncle was wrong, because he was like, no, this is a buyer's market. This is when you want to be buying a house. I was like, no, this is not what you want to be doing. You can buy a house, yeah, but don't be doing these interest-only loans. That's stupid. That doesn't make it. You don't understand. Because no, you don't understand, Michael. In 10 years, these properties will advance and appreciate in value, and then you can do a refi, and then everything's great. I was like, no, Uncle Stan, you're wrong. This is wrong. I see this as a problem. They're going to get people caught up, and they're going to be able to accumulate all the properties and have made what would they have made over a full life of 30-year mortgage. They're going to make that in the first 10 years, and they still own that property, and they're going to either force those individuals to start paying a higher premium, or they get to sell it to someone else. That's what I see. And my uncle basically laughed at me, said, no, you don't know what you're talking about. It doesn't work like that. Well, guess what? He's never told me to my face, but I guarantee it's entered his mind several times. He was right. And I wish I was wrong. But that's, unfortunate, but a lot of people got caught up in that. And a lot of people that had jobs back then that had those homes that priced them right out of their house because their jobs couldn't support it. And a lot of them got 2 jobs, working a regular job and then working a fast food job or a pizza delivery job or seasonal job just to try to make ends meet. And then even that, it was just like you can't keep up with it. The payment jumps up too high. And then we had the loan issue where when the banks were, when we were bailing them out, it was like a year and a half before you could get, a mortgage. Even with good credit, it was hard because it was like a freeze on lending. They didn't want to do it. And that was concerning for me too, because I was looking at different properties and I was like, what's going on here? I got amazing credit. Why can't I get something to get this property going? No. We have to wait. We have to do this. We have to check this. And I'm like, what? That part in that period of time, that was scary. And folks that were trapped in their house, they couldn't sell it because nobody would pay for that. And they couldn't do another purchase to get into a cheaper house. They were stuck. So what do? You got to go back to renting. And what can you rent when everybody else is doing the same thing? All rental properties, rental apartments, condos, all those types of things. They were real quick gathered up because people were walking away from their house in foreclosure. They're just leaving their houses. This is the way it is. Going in, stealing the cabinetry, selling it to people, and selling it to general contractors, and the people, use it in their own purchases. But we have all that stuff behind us that hasn't really come home to roost yet. Everybody thinks it's just like, okay, that's all gone now. No, it's not. It's still here. It's still lingering. Those effects are still lingering in the marketplace. And the derivatives are still there too. All they did was repackage them. That's scary. They didn't just walk away from all that stuff. These banks are still holding all that stuff. They just wrapped it up in different wrapping paper. So I would love nothing more to be able to say it's, great days ahead. It's not. All right, so the stop is going to be staying where it is. The order block here, I'm looking for that to give way. If we get on the other side of the fair value gap, the stop will stay where it's at. I'll try to move it to break even. If it gets down to below this down close candle at, let's see what that close is. If we get down to 127 big figure, then I'll take the stop down to break even. Otherwise, the stop stays where it's at. I'll take a full stop at that point. And then I'll come back around 10:30. I'll post to the case studies thread and see if there's anything we can do in terms of updating it. It could come up there and stop me out before I even get a chance to do that, but I'll leave the stop where it is. If it goes to the stop, it will be reaching for the buy stops, and I will not be taking another opportunity this trading day. Okay, so I'm going to escape. Wish you all a good afternoon. The trade stays open until then. I will be looking for an opportunity to take something off in here if it can get down there, and then I'll leave the second portion for this. Okay, and I will talk to you later on this afternoon. Again, you got 2 lessons tonight for the bond market content at 9 p.m. and I will catch up with you later on today at the daily recap. Until then, wish you good luck and good trading.